Today, I wish to consider the theory aspect of forfeiture of shares and reissue of shares, and that too when shares are issued at premium and the premium has not been received. This segment I am going to consider with one illustration, and all the theory concept that has been explained to you will be operated in that sum. Observe it. Pass necessary journal entries in the books of the company for forfeiture and reissue of forfeited shares from the following information. Company forfeited 400 equity shares of 10 each of Anuradha for non-payment of allotment money ₹4 per share including premium 2, first call ₹2 per share and final call ₹3 per share. Out of forfeited shares, reissued 300 equity shares. So 400 shares are forfeited and 300 shares are issued. Notice it. And ₹8 per share to Aishwarya. So what is the peculiarity in this sum? On 400 shares, allotment money, first call and final call has not been received. Premium was demanded with allotment, that has not been received. So we want to write down the forfeiture entry for this 400 shares. And out of that 400 shares, 300 shares are reissued. We shall write down the entry for 300 shares also. But before that, I will explain the theory thereof. Look at the second. Company forfeited 200 equity shares of ₹10 each, held by Chetan for non-payment of allotment money ₹14 per share including premium 10 and first and final call ₹3 per share. Reissued forfeited shares to Prakhar, giving maximum permissible discount. So what is the maximum permissible discount? That point will be taken into consideration in this second sum. Next, company forfeited 200 equity shares of ₹10 each issued at a discount of 10% for non-payment of final call ₹3 per share. Company reissued all the forfeited shares at ₹6 per share. So these are the three illustrations which I am going to consider, but I am going to take into consideration the theory aspect in an elaborate fashion. Let me start with the theory. What's the title of the theory that we are going to discuss? Shares are forfeited. Which shares? Which were issued at a premium and the premium has not been received. That's the theory aspect that we are going to consider. Just observe. Now see, premium demanded with allotment or say first call, whatever it may be. When it was demanded, security premium account was credited on due basis. So security premium which was receivable was credited to security premium account. Now the allottee, shareholder, has not paid other allotment or first call. Means he has not paid the capital asked with allotment, he has not paid premium asked with allotment, or he has not paid capital with first call, or he has not paid premium asked with first call, whatever it may be. So premium, security premium account was credited on due basis when it became receivable. Now, the allotment, with allotment or with first call, the premium has not been received. It is recorded in your books of accounts as an income on receivable basis which has not been received. Now on forfeiture of shares, what happens? the title interest of the shareholder is extinguishes, amount received against capital or premium is not refundable, and amount due against capital or premium, whatever it may be, which has not been received, is now not receivable. Under these circumstances, what you have to do when you write the forfeiture entry? Premium account is credited, which is not received so far and is not receivable in future. So premium account is credited, that has to be reversed, that has to be debited. And that's what has been mentioned in this paragraph. Let us read it. In this situation, security premium account that was credited on due basis at the time of demanding allotment and calls has not been received on the shares, issued originally. The same amount or same account of security premium is debited on forfeiture of shares as the security premium no longer receivable from them. Now, the accounting journal entry in such situation will be as follows. The called up capital is cancelled, so share capital account is debited with capital called up. On shares forfeited, the security premium not received is to be reversed. It was credited to security premium account, it has to be reversed. So security premium account is to be debited, that has not been received, though asked, though demanded. So here share capital is cancelled, number of shares forfeited multiplied by called up capital per share, security premium account debit with the amount of premium not received. How that amount is worked out? Number of shares forfeited multiplied by premium due but not received. Premium due but not received per share is to be considered. Now share forfeiture account is to be credited with capital already received. So number of shares multiplied by capital received per share. Share allotment account is to be credited with number of shares forfeited multiplied by allotment dues per share, which has been demanded but not received. Similarly, share calls account with the amount due but not paid or not received by the company. For that, first call is there, then first call account credit, last call is there, then last call account credit, like that. The amount is to be determined, number of shares forfeited multiplied by calls due not received per share. This is how the amount is worked out. This is the style with which the forfeiture entry gets recorded. All of the details were explained to you in the previous sum. But the additional point that you should understand is, if premium is not received on shares forfeited, security premium account gets debited. That's an important understanding that you should keep in mind. Now I want to write down the reissue entry. Journal entry for reissue of shares at discount. Journal entry for reissue of forfeited shares at discount where originally issued at premium. Now understand one concept. What is reissue discount? Concession granted on reallotment of shares to a shareholder against the called up capital, against previously called up capital. Now suppose that share of 10 each, on which 10 rupees are already called. These shares were forfeited for non-payment of first call or final call. After forfeiture, the same shares are reissued. Now share of 10, called up capital was 10. It has been reissued at a price of rupees 8 per share. Now share of 10 each is reissued at a price of rupees 8 per share. So at the time of reissue, share of 10 offered at 8 rupees, 2 rupees is known as reissue discount. This reissue discount is to be allowed by company out of the forfeiture income that has been generated at the time of forfeiture of shares. So there are normally two types of discount. Normal discount granted to all shareholders on first allotment. Reissue discount is the additional discount, special discount other than normal discount granted at the time of re-allotment or at the time of reissue of shares which has been previously forfeited. Now when you write the entry, bank account is debited with number of shares reissued multiplied by reissue price per share. Share forfeiture account is to be debited with reissue discount. So number of shares multiplied by reissue discount per share. The called up capital that was cancelled gets credited. So number of shares reissued into called up capital per share is to be credited. This is how reissue entry gets recorded. After writing this reissue entry, there is a forfeiture income at the time of forfeiture shares. What is forfeiture income? The capital already received was transferred to share forfeiture account. From that forfeiture income, reissue discount was granted. Now, the excess of forfeiture income over the reissue discount is to be transferred to capital reserve. That is the next entry that you should understand. So, capital received on reissued shares minus reissue discount granted there against. This difference, positive difference, is to be transferred to capital reserve from forfeiture account. So share forfeiture account debit to capital reserve account credit. This is how transfer to capital reserve entry gets recorded. Now let us consider this sum in which premium has not been received, shares are forfeited and reissued. Remember, 400 shares are forfeited but only 300 shares are reissued. Notice it. Company forfeited 400 equity shares of 10 each of Anuradha for non-payment of allotment money, rupees 4 per share including premium 2 and first call rupees 2 per share. Now let me prepare the working. Number of shares forfeited are 400, share of 10 each. Now, allotment dues were how much? Total 4 includes premium 2. So, out of 4, 2 is the capital and 2 is the premium. Now, this has not been received. So, premium not received 800. 400 into 2, 800 premium not received. That's an important point. First call rupees 2 per share, that has also not been received. So 400 into 2, 800 not received. Final call 3 per share, that has not been received. This is the premium not received, this is the capital not received. Then what has been received? So total face value of the share 10, capital called up 2 plus 2 plus 3, 7. 10 is the face value. Capital called up 2 plus 2 plus 3, that is 7. So 3 was the amount demanded with application that has been received. So 400 into 3, 1200 rupees are received. Now I want to write down the forfeiture entry wherein called up capital is cancelled. Called up capital, that is 10, is cancelled. So equity share capital account debit 4000. Premium not received is to be debited to security premium account. So security premium not received 800 is debited to security premium account. This is an important point. 800 security premium not received. Now, what has not been received and what has been received, notice it. Share allotment dues not received 800 plus 800 credited to equity share allotment account. First call not received is credited to equity share first call account. Final call not received is credited to equity share final call account. And this capital already received 1200 is credited to equity share forfeiture account. So share forfeiture account credited with 1200 capital that has been received. Now this is how the forfeiture entry gets recorded. The important point to be observed by you is security premium not received is debited and the allotment dues including security premium has been credited. That's an important understanding that you should hold. Now I want to reissue these shares. How many shares are reissued? All the 400? No, 300. So 300 shares are reissued. Forfeiture income is what? 1200 rupees on 400 shares. So what is the forfeiture income on 300 shares? 300 into 3, 900 is the forfeiture income. 300 into 3 is the forfeiture income on 300 shares. So 900 is the forfeiture income on 300 shares. So maximum discount that could be granted on reissue of shares is 900. You cannot give discount, reissue discount more than the forfeiture income. So maximum reissue discount that could be granted on reissue of these 300 shares is 900. Now how much discount has been granted on reissue of shares? The shares were reissued at 8 per share, share of 10, issued at 8 per share. Called up capital was 10, reissue price is 8, 2 is the reissue discount. Reissue discount 2 rupees is granted on 300 shares reissue. So 300 into 2, 600 is the reissue discount. That discount is to be deducted from the forfeiture income of 300 shares and that will be transferred to capital reserve. This is what I have explained to you. Observe that on the screen. 300 shares are issued at 8 per share, so 2400 is the cash received. Out of 10, reissue price is 8. So reissue discount granted 2 per share. So 300 into 2, 600 rupees is the discount granted. Bank account debit. This discount has been granted out of forfeiture income. So share forfeiture account debit 600 to equity share capital account. The called up capital on 300 shares, 300 into 10, 3000 is credited to share capital account. Now I want to transfer the share forfeiture net income on shares reissue. See, now forfeiture income on 400 shares is 1200 rupees. So forfeiture income on 300 shares is 900 rupees. Discount granted, reissue discount granted on 300 shares at 2 rupees per share 600. So amount to be transferred to capital reserve is 300. So equity share forfeiture account debit 300 to capital reserve account debit 300. This is how transfer to capital reserve has been worked out. This note that I have prepared while solving the sum was already demonstrated to you while explaining the theory aspect. Now I want to consider the next sum wherein, next part of the sum wherein once again the same understanding is applied. If you write all the 3 entries with narration, it will look like this. So in your examination, your sum should look like this. While explaining these entries, whatever the working note that I have prepared, that's for your better understanding. No need to go for such elaborate preparation of working note and satisfying the instinct, precise drawings. Don't do it. It's time wasting in examination. The understanding that you fetch by this type of explanation, that should be applied straight for writing the journal entries, and this is how your answer should appear in examination. Now let us go to the next one. company forfeited 200 equity shares of rupees 10 each held by Chetan for non-payment of allotment money rupees 14 per share including premium rupees 10. The first and final call rupees 3 per share and first and final call rupees 3 per share also are also not paid. Reissue all the forfeited shares to Prakhar, giving maximum permissible discount. So here the important point of emphasis is maximum permissible discount. Let us start. Number of shares forfeited are 200, share of 10 each. Total allotment due 14 rupees, which includes premium rupees 10. So capital content in allotment dues 4 rupees. This has not been received. So capital not received 800 and premium not received 2000. The first and final call means final call. Rupees 3 on 200 shares has also not been received. So 600 rupees are not received. Then what is the application money? Let us find out. Out of 10 rupees you are required to deduct the capital content of allotment and final call, that is 7. So 3 rupees is the application money. And on 200 shares we have received application money, that is 600 per shares. This is the working that I prepare. When I want to write the forfeiture entry, I always find out number of shares forfeited first, how much amount has been received against capital, how much amount has not been received against capital, that is the total called up capital, that is to be cancelled. So share capital account gets debited with called up capital. Notice it. 200 into 10, equity share capital account debit 2000. Security premium not received has to be debited. So this is the security premium not received, that is debited. So share security premium account debit 2000. 2. Amount due on allotment not received 2800. Share allotment account credit 2800. And final call rupees 600 not received. So share final call account credit 600. This is how forfeiture entry gets recorded. No, we have not yet considered the capital received, and that capital received has to be credited to share forfeiture account. So share forfeiture account is credited with the capital received. Now I want to reissue these shares, giving maximum discount. As I told to you before also, what is the maximum discount that could be granted to an allottee at the time of reissue of shares? That can never exceed the forfeiture income on those reallocated shares. Here all the shares forfeited are reissued and your forfeiture income was 600 and all the shares are allotted. So maximum discount out of forfeiture income that is permissible or could be granted is 600 rupees. So when you write the reissue entry, what is the normal structure of reissue entry? Bank account debit, share forfeiture account debit, to equity share capital account credit. Now forfeiture account is debited with the reissue discount granted. The maximum reissue discount granted is 600. So bank account debit, share forfeiture account debit, equity share capital account credit. That is the structure, layout of reissue entry. So here, so 600 rupees will be debited to share forfeiture account. Share forfeiture account debit 600. Now at the time of reissue of shares, the called up capital that has been cancelled is credited. So share capital account is to be credited with 2000. So 2000 is to be credited to capital account. Reissue discount granted is how much? 600 rupees. So what is the amount received? What is the reissue price? So reissue price that is to be debited to bank account. Now this reissue price is identified as minimum share issue price of forfeited share is equal to capital not received on forfeited shares. So how much capital was not received? 800 plus 600. 800 plus 600. 1400 was the capital not received. The capital that was not received must be recovered, must be collected at the time of reallotment of shares. So bank account is to be debited with 800 and 600, 1400. Or if you want to work out other way, 2000 minus 600, missing number 1400. So this 1400 is the amount arrived at or explained to you in two different ways. This is how reissue entry gets recorded. Now in this, the maximum discount is granted. So entire forfeiture income is consumed at the time of reissue. So no balance is left in share forfeiture account. So no amount is transferred to capital reserve under such circumstances. Now notice that only two entries are there, forfeiture and reissue, because maximum discount is granted. So no amount left in the share forfeiture account which need be transferred to capital reserve. So this is how the entries are recorded. In examination, when you solve the sum, the entry should appear in this manner with narration. Observe it. The same entries that has been explained is presented to you. How should that appear in your answer sheet in examination? Previous part was an explanation part, and this is what you should write in the examination. Next. Company forfeited 200 equity shares of rupees 10 each, issued at a discount of 10%, for non-payment of final call rupees 3 per share. Company reissued all the forfeited shares at rupees 6 per share. Number of shares forfeited are 200. Share is of 10 each, 10% discount. 10 into 10%, 1 rupee is the discount. So this is the share discount, normal discount granted at the time of original issue of shares. Final call, not received. So 10 is the face value, 1 is the normal discount, so 9 is the amount recoverable. Out of that 3 is the final call. So capital received is 6 rupees per share. 200 into 1 discount, 200 into 6 capital received, 200 into 3 capital not received. Now I want to write down the forfeiture entry. In the previous sum we have discussed how the forfeiture entry gets recorded when the shares were originally issued at discount. We know the journey of share discount account. When it is originally allotted, share discount being lost, debited to share discount account. At the time of forfeiture of shares, the same share discount account gets reversed, means it was debited, it is reversed. So share discount account is to be credited. Once again, the same share discount account is to be debited at the time of reissue of shares. Observe it. Total called up capital 200 into 10, 2000. Equity share capital account debit. Discount, equity share discount account is to be credited. As I told you, it is reversed. Capital received is credited to share forfeiture account. And capital not received is credited to final call account. This is how forfeiture entry gets recorded. Now all these shares are reissued at a price of rupees 6 per share. So share of 10 issued at a price of 6. Total amount, total concession, total discount is 4 rupees. Out of that 4 rupees, 1 rupee is the discount that was given to all the shareholders at the time of original allotment. And out of 4, 1 is the normal discount. So 4 minus 1, 3 rupees is the reissue discount. Bank account debit. 200 into 6. The normal discount account, share discount account debit, 200 into 1. Reissue discount, 3 per share, 600. This discount has to be given out of share forfeiture income. So share forfeiture income account and debit 600 to capital reverse cancel at the time of forfeiture gets credited 2000. Observe. Very important point. Why you could receive 1200 rupees at the time of reissue? The shares were required to be reissued because they were required to be forfeited. Why you have forfeited the shares? The shares were forfeited because of non-payment, non-receipt of 600. So non-receipt of 600 is the cause for receipt of amount at the time of reissue. So 1200 rupees are received at the time of reissue is the consequence for a cause of non-receipt of rupees 600. So 1200 minus 600 is the gain that is to be transferred to capital reserve. So share forfeiture account debit to capital reserve account credit. This is one way to arrive at the amount to be transferred to capital reserve. The another style of working out, notice, the capital received, forfeiture income 1200. Out of that reissue discount granted is 600. So reissue discount has to be deducted from 1200. So this is the another way by which you can arrive at the amount of 600, but the entry remains the same. These are the two ways to explain the amount 600 that has been done. But you are supposed to write just one entry for that. Share forfeiture account debit to capital reserve account credit. Now, how these entries will appear in your notebook when you solve the sum? This is how all the entries should appear in your notebook. This is what is expected by the examiner in the examination. I think you have followed this sum. This is a very important sum. Here I have discussed the theory too. Thanks to all of you.